Welcome, G-Traders. You're watching a recap of the Asian session on June 9th. Japan's stock market is extending a steady rally today. The market has recouped losses of the two previous sessions and also surpassed a 33-year peak. Besides, antipodium currencies gained ground at the end of the week, having found support from an optimistic sentiment on Wall Street on Thursday. The statistics on the U.S. labor market released yesterday cemented expectations that the Federal Reserve would take a pause in the rate hikes next week. Though a weekly update in the U.S. initial unemployment claims is not a report of a crucial importance, the market understood its gravity this time. A sharp increase in the claims to the highest level since October 2021 proves that the labor market is cooling down. Previously, Fed's policymakers pointed out that the central bank would adjust its policy decision to economic data, so the rise in unemployment claims suggests the likelihood of a dovish decision. The Fed Watch tool currently signals a 75% chance of a pause in monetary tightening. However, the U.S. inflation data due next week will be the key to the Fed's policy decision that will be unveiled on June 14. Meanwhile, currency and the stock markets are set to trade sluggishly amid the empty economic calendar until the Fed's policy meeting. The US dollar took a nosedive yesterday in response to yesterday's report on the jobless claims. Its index seems to close on Friday lower for the second week in a row. On early Friday, the index was trading in a narrow corridor between 103.20 and 103.40, and the US dollar weakened to a two-week low against a basket of 6 major currencies in a parallel to yields of US Treasuries. Yields of both the 2- and 10-year Treasuries went down. Nevertheless, the greenback gained momentum and rebounded to 103.40. Apparently, the bullish momentum occurred amid weekly profit-taking on the stock markets and the decline in the global risk-on mood. So, the US dollar is expected to enter a consolidation stage, which could last until the release of the US inflation data. In the case the instrument maintains bullish momentum next week, it could face resistance at 104.60, the level printed on May 31. On the contrary, if selling pressure on the greenback escalates, its index could break 103.20, a one-month low recorded on June 8, and test support at 102.90. Market revised its sentiment on the Japanese yen overnight. Having reached the one-year low at 138.70, traders rushed to sell the yen. As a result, the dollar-yen pair jumped to 139.60, and the bulls are pushing the instrument up following the intraday corridor between 138.70 and 139.60. All in all, the overall market sentiment depends on the rhetoric of the US and Japan's central banks. Obviously, the Japanese yen is given in to the greenback, and the Bank of Japan maintains all settings of its ultra-loose monetary policy, and this message was sent once today again by the governor. Speaking for the parliament, Katsuo Ueda said that the Bank of Japan intends to pursue its ultra-accommodative policy to ensure steady inflation at 2%. Japan's regulator is due to announce its decision on interest rates in a week on June 16. And this will happen after the policy meeting of the US Federal Reserve, and they could determine a further trajectory for the dollar-yen pair. For a while, the US dollar's growth is subdued by the prospect of a dovish pause in the Fed's monetary policy. In turn, the yen could regain some losses as a safe haven asset on the back of a threat of the global downturn. Economic conditions in China cause an alarm in the Asia-Pacific region. In the recent reports, China's trade balance surplus fell to the lowest level in 3 months. Besides, the annual rate of consumer inflation edged up to 0.2%, and thus indicating weakness in the second largest global economy. Amid the dismal statistics, market participants are speculating that the People's Bank of China might decrease interest rates again. The offshore yuan weakened against the US dollar to the lowest levels in 6 months. Indeed, the greenback benefits from economic troubles in China as a safe haven asset. A decline in yuan affected the forex rate of the Australian dollar, which is frequently used at its liquid replacement. Economic uncertainty in China, the top global crude exporter, is also a headwind for oil prices. And WTI crude futures are trading lower today, thus putting pressure on the Australian dollar as a commodity currency. And today, a boost of the risk sentiment on the stock markets is dampened by the US dollar's advance. No wonder the Aussie is trading with a high volatility. The AUD USD pair broke the resistance at the psychological level of 0.6700 and approached 0.6715. The Australian dollar is withstanding selling pressure, trading inside the corridor between 0.6693 and 0.6725. The cautious sentiment in the stock markets discouraged the risk-sensitive New Zealand dollar. Amid the moderate growth in the US Treasury yields and the greenback's advance, the kiwi changed hands between the buyers and sellers inside the corridor between 0.6084 and 0.6106. Still, the New Zealand dollar spiked to 0.6103, the highest level in more than 2 weeks, and dipped to 0.6095. Following a sharp launch in late May after the Reserve Bank of New Zealand's policy decisions, the kiwi has regained almost 1% of its losses against the US dollar. Confused sentiment is a rule in financial markets despite the empty economic calendar today. Market participants are braced for a turbulent week and make profits with the InstaForex. And don't forget to subscribe to InstaForex TV channel, and see you online.